Well, good evening, ladies and gentlemen, and thank you for being with us today. Mick, welcome to you, my friend. Thank you for that. The screen's up. How's the volume, mate? Loud and clear. Wonderful. You're a mile ahead of me. Full moon today. Yes, indeed. Yes, indeed. It's been amazing. And we are well overdue for a lunch, Mickey. So let me know when you're free, and we'll get at it. Okay. So let's see what's happening today. Here we are. All our usual friends are here. Harold, good to have you with us. Harold from Reading, a particular friend of mine. Joe's with us. Mark L, couldn't be a party without him. Mickey D, of course. Partho's with us. Peter Mack, who's not a day trader, is with us. Pire's with us. Scott, new client. Spoke to Scott and his lovely wife Kim during the week. They'll be doing a tutorial in June. Toddy's with us. Vicky's with us. Always. We don't have many lady members, but we are always most grateful to have them on board. And I'd like to say a special hello, Vicky, and any other ladies as well. Yes, Partho, hello. And Partho says hello to everyone. We're all feeling good today, right? So I'm going to talk about Forex today, which is a bit of the forgotten part of the family, really. I'm so excited about what's happening in equities and US dollar index and grains and futures generally that I don't really spend enough time on Forex. And we need to remember that we actually started off as primarily a Forex business. I was a Forex trader before I found the Danielcode. But interesting that although I do an awful lot of work with you on equities, futures Forex rather works exactly the same. And the Forex guys are always trying to differentiate themselves, I should say, from here we are. Let me see. Let's make sure everything's happening here. Yeah. Forex guys are always trying to differentiate themselves from futures. So they do little things like they'll call a tick, the tick value, the smallest amount the market can move. In futures, they call it a pip to try and make themselves different. And most people believe that Forex is a separate method of trading and a different approach, but it's not. With the Danielcode, Forex trades exactly the same as futures, or if you like, futures trades exactly the same as Forex. They just absolutely trade exactly the same way, and I'm going to show you some of that today. So let's move on now, and I start off all of these webinars by saying markets are rational, orderly, and sometimes predictable, and recently I've been showing you a whole lot about time cycles and price as well. So you know that these Danielcode ratios control time and price in all markets, including Forex, which I hope I'm going to demonstrate to you today. So over the years, a little bit of background story on Forex. Forex is started off essentially as a Japanese invention, and it still is the major player in Japan. Forex is incredibly popular in Japan, and the vast majority of Forex traders in Japan are women. It's quite a statement. It's quite a marked attitude. But Forex sort of started off a bit in the Wild West, and one of the problems was that Forex platforms weren't regulated very well, and the ones that were regulated, it was pretty much a light touch. But that allowed all sorts of cowboy operators and others, some good, some not so good, to open platforms. And for the worst of them, what they were doing, it was pretty universal back in the day, is they took the assumption that you couldn't beat them and they would just take the other side of the trade. And they gave themselves a decent edge, because what they could do is they could manipulate the spread between the bid and the offer. And in one notorious case many years ago, we were trading the New Zealand US dollar pair, and at the time we placed our orders, the spread between the bid and the offer was about 7 pips if you like. And 2.5 hours later, it had widened to 70 pips. And of course, if you can do that in a platform, they can knock off the orders, both sides, without the market ever having traded there. So what some of these guys were doing was, as I say, they were taking the opposite side of the trade. And most of them had an A and a B book. And if you were a newbie, you went straight into the A book. They didn't think you could possibly be a winner. So they'll take the other side of that trade. Then when you got to people like me, you went into a B book, sometimes a C book, which meant they were laying off part of that risk with their banking group. All of these platforms are backed by a banking group. When I say backed, they provided the prices. They didn't offer any guarantees unless they became a party to some of the transactions for the guys that were pretty good at this, and the platform didn't want to hold. So we had a couple of interesting events over the years that you really need to know about to understand the history of Forex. And the first of them was with a crowd called Peregrine Financial Group. They were owned as well by a chap called Wassendorf. He was a big promoter, and it had a bit of a touch of the Bernie Madoff about it, that he was so well regarded by the Futures Commission that he was never audited properly. And they did the audits, but they, whether they just take your word for it or they actually go and look for themselves are two different things. Now, I've switched from Forex back to futures, but I'll tie it all together for you in a few moments. So Wassendorf was a big spender, had a couple of aircraft and flying people around to basketball games or baseball games or football, whatever was the fashion at the time, or rock concerts. He was a huge spender. What he'd done is they'd moved out of Chicago. They'd moved the firm out to a town, a small town not far from Chicago, and pretty well took it over. He owned the theater. He opened a new restaurant. He opened the grog shop. He owned a good part of the businesses in that particular town, and he built a three-story office building just for his staff. Very nice it was too, I can tell you. But the great trick was that he didn't allow his employed accountants, and presumably didn't allow his auditor either. He had a very small one-man firm, auditing firm out in the sticks somewhere. He didn't allow them to collect the bank statements, and the bank statements were sent to a box office in an even smaller town, another 20 minutes or so away. And Wassendorf would drive out to pick up the bank statement himself, and would then alter it with tools that were available back in the day. It turned out the whole thing was pretty much it was certainly a fraud. It was pretty much a Ponzi as well. What he was doing was using new money to pay out the old clients, and eventually got to the stage that they ran out of money completely. And he parked his car, as I understand it, right in front of the reception area for his beautiful, shiny new office, and put a hose pipe from the exhaust through the window. Anyway, if you're going to try and off yourself that way, and you actually mean it, best to do it where people aren't going to see the boss's car sitting there with a hose hanging out of it. Anyway, long story short, of course, someone grabbed hold of him and stopped that happening. The important thing to remember is the marking point, if you like, in Forex was that this all finished up going to a series of very, very big court cases. It turned out that the liquidators sued their bank, saying it was total negligence by the bank and the auditors and everyone else. In the process of that hearing in the bankruptcy court held that Forex was not a security within the meaning of the U.S. securities legislation. So you didn't have the protection, statutory protection of the CFTC or any of the other groups involved. So at the end of the day, if you had a futures account, you got almost all your money back. Took years and years and years, but you got your money back after they'd settled with the bank. Pretty much there was some small losses. If you happened to have a Forex account, you got nothing because it was deemed not to be a security within the meanings of the Act, so they didn't have any priority. You were just a general creditor and got back absolutely nothing. So that caused an enormous furore in the financial sector. Lots of attempts to make the oversight by the CFTC and others much closer, much tighter. And that was way back in 2012. A few years later, in 2015, a very big foreign exchange crowd called Alpari. They originally started in Russia, but their main activities were in the UK. Their head office was in the UK. And they were a big deal. They had offices, I think, pretty much all around the world. I think they had over 200 separate offices. And they were big promoters, big marketers, chasing that what is thought to be the high value dollar, advertising at polo matches and Formula One car racing and generally that sort of thing. And what happened with them is that they were taking the other side of the client's trades. And back on the day there, I remember it well because we were short the Swiss franc. That's what caused it all to happen. And the Swiss franc at that time had been pegged to the US dollar. So it was also, by correlation, pegged to other currencies as well. But you wouldn't think that the Swiss bank couldn't hold a peg, but they couldn't, and that was the reality. So we were trading this day, and I remember it well, and favourably, what's more, and we were short, and I saw it go down to whatever the support level was, and I think it was $1.22. This is 2015. Goodness me, we're talking many years ago. We're talking 8 years ago. So don't quote me, but I thought it was about $1.22. Anyway, we saw the market hit that and start to recover, run away from it a little bit. And I thought, oh, well, that'll be it. I'll get stopped out now anyway. It broke the peg. It just went straight down. The Swiss bank, the central bank of Switzerland, couldn't hold the peg. And next morning, it was about a $24,000 trade per contract, mind you. And of course, Alpari couldn't open their doors the next day. And that was a big deal. It was a very big deal at the time. And between other matters, but Alpari really frightened everyone off. Enough that with the US bankruptcy court holding that Forex was not a security under the US securities legislation, a whole lot of American guys started trading currency futures instead of Forex. And after Alpari going up, belly up, the regulators in the States really got stuck into it, and they set out all the requirements to be a Forex platform, which included some very, very large capital reserves and some pretty onerous conditions, to the extent that almost all of the then existing Forex platform said it's not worth it. It's too much cost, it's too much regulation, we're not going to do it. And Gain Capital, for example, who were one of the biggest Forex brokers in the States at the time, they just sold their business. I know they sold part of it to an Australian firm. They might have just, farmed it out on some sort of share basis, but they just don't offer. Most US brokers now just simply don't offer Forex. Back in the day, they all did. So there's a little bit of history of it, and it leads you to think about where is your platform, which is the platform, who's regulating it, because there are some very, very popular platforms in places like Georgia, Gibraltar, Malta, that can offer much higher levels of leverage. I think for the US, if you've still got a platform there, and there are some platforms in the US, I think from memory they're pegged to 50 times leverage. I know in Malta you can get 500 times leverage. It's pretty wild cowboy stuff. So make sure you're with a reputable platform. So that's a little bit of the background about the wonders and the marvels of what happens with Forex. So whatever you want to know there, let me know. I'm happy to tell you all. Okay, let us move on. So this is actually the Euro Chief, the Swiss franc, and you can see what happened. This is a 24-day chart, the 24-day bars. Each bar has 24 trading days in it, and that was the party for Alpari on the 15th of the month, and down it went. I was actually trading this one, a GBP Chief, at the time, and it was even better, as you can see. And it was pretty dramatic at the time. And of course, if you ever happen to be in a market where you get a really big runaway move, I don't mean it's got to break the peg or do anything quite so dramatic, but whenever you get really substantial volatility, it's worth thinking about going to a trailing stop. So as you can see here, this market bounced off its low pretty dramatically, and if you change your stop loss to a trailing stop, you got the best part of it in your account, which is always the aim with these things. So let's see what's been happening with this Forex market over the years. This is EUR-GBP, and you can see the little arrow I put on it, and that tells you where they had the Great Britain left the European Union. So that was Brexit. And it's astonishing, isn't it? It is to me, how just tightly correlated those two markets have been, GBP and Euro. Before Brexit, it was just been trading in a range for years. And apart from a quick breakout a couple of months after actual Brexit, that's it. It's just kept to that range trading going along all the way. So they're obviously monitoring the relationship between GBP and Euro pretty tightly. This is the US dollar index, and I've stuck it in here to show you what is happening with the US dollars. There's articles seem to be almost every week about the death of the US dollar, and it's not going to retain its status as the reserve currency of the world because of what China's doing with the BRICS and this and that and the Belt and Road and all the other things that are going on. The reality is it went up very, very high in 2022 on a historic basis. Bear in mind it's now only a fraction of what it was back in the day, but this chart takes you back to 2005. So you can see there's a pretty substantial piece of data there. And the US dollar is actually staging a pretty strong fight to hold on, to keep itself above the highs, the old highs. So it's in a good position. But gold, of course, is so susceptible to the movement in the dollar heading down. Gold's been on a tear. It's doing very well. And continues to do well without any sort of fundamental basis, although gold bugs would argue there's always a fundamental basis for gold to be bullish. But bear in mind the US dollar is correlated through a lot of those pairs. When I talk to the guys who do trade Forex, they'll all be GBP and Euro, meaning both of them against the US dollar. So, but the fact is they're correlated. If you've got the US dollar or any other currency on one side of a number of markets, those markets are correlated with each other. Although they won't have correlation to quantum, they will have correlation to direction. So if you're a Forex trader, guys, and you like trading GBP USD and Euro USD, stop now. Pick one or the other. Better still, take your signals from those big markets and put your trade on in a correlated market. It's really amazing how often you see that the correlated markets that don't themselves have a signal do better than the markets that do have the signal, and that's because trading on correlations is much more subtle, and there's just a whole lot less people in that trade, so you tend to get much better results. So you bear in mind what the US dollar is doing. This is GBP Chief, and I wanted you to have a look at this to show you this is a market that we don't publish on members charts. All of the markets that are not on members charts, I'm doing these charts for them anyway, as you can see here, and you can see how incredibly accurate these markets are. You see how they topped right at the 1245 line. The last up bar just went a handful of ticks through that, and on the sell signal, the inside bar, it stopped exactly at that high precisely, and it was supported exactly 2 levels lower. I mean, accurate and precise, pretty much to the tick. It's just amazing how accurate Forex is, and it's consistent. And we actually had a buy signal in this market today, which was elected. And it's no real surprise if you see where this market closed yesterday. The close at the red line was at 1109, and the close I think was 1107. Just right on target. Absolutely wonderful stuff. Okay, so let's have a look at a few others. For this week to Wednesday, some of these charts are only up to Wednesday's data. But I wanted to show you just how prolific and Forex trading is and how excellent it is. This is dollar yen, and we had a sell signal for that, and here it is. So the last bar up that set up the sell signal, it had a high of 137,542. Look where the blue line is, 137,572. Absolutely amazing, isn't it? So there was a sell was elected, down it went, one bar down, another bar down. What happened today, the low today was 133.502. Where's the numbers there? Have a look at them. 133,506. The four ticks variance at the low, and the close pretty much right on 134,205. Amazing. So in these first 3 days of this week, we have had 17 Forex signals. 13 were elected, or you would probably say filled. I use the expression elected to mean that the market went to the number we require before we're filled. And on a one-day basis, all of them were profitable. On a 2-day basis, 12 of them were profitable, and the other one went into a flip me, which it struggled with today, but it went from short to long. And this is a pretty typical sort of a chart. We expect the degree of accuracy that you see here. We expect that to happen all the time, and it does. They're amazingly accurate, these markets. This is Aussie USD, and you can see the setup came 2 days before the low, when that would have been April 26th. The low of that bar was 65.92. There's your blue line at 65.90. 2 ticks variance. That's the setup bar. Little inside bar, outside bar as it makes up its mind and waits for time to catch up to it, and then whoosh, off she goes. So that's exactly what these markets do. Have a look at this one. This is the CAD Chief, and it had a sell signal, TO3 sell signal back on Monday, and Monday's bar, if we have a look at that, right up to create our TO3 sell signal on Monday, that bar closed at 66.12. There's your red line, folks, 66.13, 1 tick variance. The next day, which would have been the Tuesday, the market did a outside bar, which was a key reversal bar, based to, that's the response it gave to its TO3 sell signal. But the high of that outside bar was 66.28. Where's your red line? 66.29. 1 tick variance, and that's typical. That goes on and on. Now, for today, we had a TO3 buy signal, which was not elected, but we did get a key reversal bar, which is not shown on the screen at the moment. But that bar, today's bar, put in its low at 64.77 against the blue line at 64.79, 2 ticks variance. And that's what happens all the time. So what I'm trying to show you today is how incredibly accurate Forex is, because remember that it trades exactly the same as futures, which means that you will not get a turn without target recognition. In other words, you need target recognition as your final filter, however your system you're trading, and it doesn't matter what. If you want your life to become a whole lot better, start adding the Danielcode numbers to your charts, and you'll find that turns will happen after target recognition, and that's about 92%. In other words, the chance of getting a turn, the probabilities of getting a market turn when you haven't had Danielcode target recognition is less than 8%. It's actually down around 4 or 5%. The last time we did the big numbers. So it's amazing stuff, and precise, accurate, wonderful. This is the Euro-USD. Same thing here. It's on a TO3 plus buy signal, and we had a sell for today, and down it went. You can see from the chart, though, that high on Wednesday was 110913. So not far from the blue line, pretty close, handful, and it replicated that today, and way down it went. This is the one that had a sell signal that was valid. It was profitable at the first close, and it reversed and got into a flip me long, and there's another small up bar today, which is not on that chart. But see how precisely it is monitoring the Danielcode price levels. That blue line up there is at 12588. The previous high was at 12584, 4 ticks variance, and Wednesday's high was 12590. So even better, two ticks variance, if you don't mind. Pretty extraordinary, isn't it? And today's bar just poked its head through a fraction, very small bar. We'll see what happens tomorrow. So this is the New Zealand dollar that's been on a tear, and I just want you to have a look at that buy signal right down the bottom, which was April 26th, and the close of that bar was at 61.17. Have a look where the Danielcode lines are. The blue line is at 61.17. The black line is at 61.17. In other words, zero variance. Does the market do that often? All the time. Forex does it, futures does it. They trade exactly the same. So, little run up. You can see the last bar on this chart, which was Wednesday. See how accurate this stuff is. Friday's high from last week, I should say, was 61.87 against the red line at 61.86. The little nothing bar the next day, it set up a key reversal and didn't go through with it. But on Tuesday, the high of that bar was 6218. Where's your Danielcode number? 626. Oh, on the wrong bar here. 6218. There's your red line, folks. 6217. And interesting enough, look at the close. The close was 6208, 3 ticks away from the other red line, 6205. So the market moved up Wednesday. The high of that bar was 6261. Where's your Danielcode number? 6263. 2 ticks variance. How about today? Big bar up today. Ran into the black line above it and didn't like it. Where did it close? Remember, target recognition is valid at a bar, high, low, or a close. And the close of today's bar was 6281. There's the blue line. Been on there for, well, the best part of this week. 6280 is the blue line. On target, on time. This is how the market talks to you. When you find this, you can see since the low, we've had 1, 2, 3, 4, 5, 6 bars. 5 of them have given you target recognition, either at the high or at the close. The one I didn't talk to you about was Thursday's up bar. The close of that, 61.48 against the Danielcode number 61.52 ticks. That's the market trying to talk to you. Markets have always been trying to talk to you. But until we had the Danielcode, we didn't have the language to understand what they were saying. Now we do. So this is the market on Thursday, I should say, where it elected its TO3 plus buy signal. It closed the day at 61.48 against its red line at 61.50. That's the market's way of saying to you, I know these numbers and I'm tracking them. The very next day, which was the Friday of last week, the high of that bar was 61.87 against a red line at 61.86. Again, 1 tick variance. The market is saying to you, I know these numbers and I'm tracking them. We don't get any recognition on the next day, the little key reversal bar, but on to Tuesday, and that was the bar. The high of that was a 6218 against a red line of 6217, and that same bar closed just 2 ticks variance from the 6205 number. That's the market's way of saying to you, I know these numbers and I'm tracking them. Here's the next bar we get to, which is Wednesday, which is the last bar you see on this chart, and the high of that bar was 6261. Where's your red line number? 6263. 2 ticks variance. Nothing. That's not even as thick as a hair. That's perfect, almost perfect target recognition. And today with the bigger bar and presumably more volatility, no change. The close of today's bar didn't give you anything at the high. Well, it wasn't that far off, to be honest with you. The high was 62.98, and the black line, the famous black line, was at 62.93. 5 ticks variance. That is target recognition. We're so spoilt, really. We get this all the time, every day, every market. But look at its close. This market pulled back enough to close at 62.81 on the Danielcode blue line at 62.80. That is the market's way of saying, I know these numbers and I'm tracking them. And we get that all the time on markets. And if you don't get target recognition within 3 days, that's the market's way of saying to you, not this series, not these ratios, use a different set of ratios. The Danielcode is schooling you as it goes along, if you can understand what it is saying to you. And it's a busy little talker, it never stops. Here we are. This is dollar CAD, the loonie, important to a lot of our clients who live in Canada. We have a lot of Canadians with us, so welcome to all of you Canucks up there. And we had a buy signal there because if you look at the little bar that's got the buy signal on it, the low of that bar was 13544. Where's the red line? 13531. 13 ticks, nothing. And that was our buy signal. So we had a buy signal. It was profitable on the first close the next day. Indeed, it was still profitable on the second close the next day, but we had a sell signal. And the sell signal for today, the market elected that, and down it went, and took out the old lows there. Wonderful stuff. Great market for trading. So if you're trading Forex, first of all, make sure you have the best platform. As I told you about, some of them are a bit sketchy, and you don't want to be with those guys. And for beginners, the shortest time in the market means the smallest risk. That's why our default exit is first profitable close or first profitable open. They mean almost the same thing. Forex trades almost pretty much continuously apart from the weekend. So your close and the next day's open tend to be pretty close to each other. So when you're in a trade, in not only in Forex, in any market, the Danielcode signals are basically turns. And they're either a turn against the current trend or they're a turn to get you back with the current trend. Now, if you've done a Danielcode tutorial, you can determine trend with a high probability of accuracy from the last completed bar on the chart that is not an inside bar. So that's what you'll learn if you do a Danielcode tutorial. You'll learn a lot of other stuff as well. But that lets you... Gig's with us again. Hello, Gig. Good to have you with us. You weren't here a bit earlier. Knowing the numbers are great. Yeah. Says nothing about whether it's over or something. Let me see if I can read that. Gig, here we are. Nothing about whether it's over or go further. No. Danielcode is mute on quantum. The signals can give you a little profit, a little loss, or they can give you a whacking great big run. And to get that big run, which we're going to look at later, is really having that knowledge about what is the apparent trend. And you have that knowledge because you've done a Danielcode tutorial. And if you've done a tutorial, you can tell the trend with a high degree of certainty from the last bar on its own, as long as it's not an inside bar. So Danielcode signals are all about turns. They can be turns against the apparent trend, or they can be turns returning to trend. If you're a novice trader or a newer trader, that's the biggest decision you've got to make when you have one bar elected of a trade. Has that bar caused a change in trend, or are you trading against the apparent trend? And do you know how to manage your stop in those two different circumstances, which I'll teach you if you do a tutorial. But that's why the simplest exit is exit first profitable close or first profitable open, because you don't have to make that decision about what is the probable trend. And that's why with new traders, novice traders, we say use the exit first profitable close, so you don't have to make that decision. Once you're comfortable that you can make that decision with a reasonable degree of accuracy, and you don't have to be perfect about it, you just have to be better than the majority, which shouldn't be hard because most people who trade haven't got a clue. And you can then make that decision. If you think you're with the trend, you'll hold the trade. If you think you're against the trend, you'll take profits. So once you're comfortable that you can identify the current trend, you can stay in the market longer. And a simple way, if you want to stay in the market longer, start thinking in terms of a 1-bar stop, which means the stop loss goes above the highest high or below the lowest low of the last completed bars, not counting inside bars. And particularly have a look at a 2-bar stop. The stop goes above the highest high or the lowest low of the last 2 completed bars that are not themselves inside bars. It's a very, very popular strategy, 2-bar stops. But if you're going to use them, make sure you actually understand what's happening, because they are very popular, and that means when the market decides to ignore them, you can get whacked if you don't know what you're doing. So this is CAD Chief TO3 sell at the high, and right now we're on a TO3 buy, which will probably be elected on Friday. And I've just put those on. We talked about it before. I want to show you that degree of accuracy there. And the same on this one. This is EUR-JPY. This is a correlated TO3 sell. You should be aware of correlations, particularly in Forex, because it's happening all the time. Any one of these markets that's got euro on one side of it or the yen on one side of it, they're correlated directionally to such a high extent that a signal in any market can be executed in any other correlated market, provided the trend is elected. This is a correlated sell. We didn't have a sell on the EUR-JPY up at that high, which was on Tuesday. But what we did have is we had a TO3 and blue line sell in GBP JPY, and we had a TO3 sell in CAD JPY. So they're correlated trades. If those trades are elected, you can execute them in any other market. And this is one of those instances with the market that didn't have its own signal, because you have to go back a day in time to find the signal, and the signal actually came on the big Friday up with the high of 150.430 against the blue line of 154.14. That gave you target recognition, which is the first step you need if you're going to get a turn. So that was nice, but it didn't carry that signal forward. It was only valid, the signal is valid for 2 days, unless they're a blue line signal, when they're valid for 3 days, including the day of posting. So that created the signal, but it was out by the time the trade got elected, but we followed correlated trades, and this pair actually did better than the pairs on which we had direct signals. This is just to show you, again, I'm harping on this. Don't know if people think about enough the accuracy of these Danielcode targets, what we call targets. And yes, they are support and resistance, but they're entirely different to support and resistance, because they are so accurate that that's what triggers turns. Which we're all about. If you look at the last up bar going into the blue line, the high of that bar is 172.097. The red line is at 172.152. Nothing, just almost perfect. So you get your sell signal there, TO3. What happens the next day? You get a key reversal bar, but look where this thing turned. Look where the high was. The high of this was 172.327. Where's the blue line? 172.317. A handful of ticks. Nothing, not even as wide as a hair. Market's just showing off, showing you how perfectly he knows these numbers and responds to them. Next bar down, Wednesday's bar down. Where was the close and low of that? Well, the close was at 169.289. Where's our red line there? Here it is, 169.257. What about the next day? Wednesday, Thursday, today we're up to speed. The close of that bar today, 168,895. Where's our Daniel code number? There it is, 168,878. Target recognition. The market is saying to you, I know these numbers and I'm tracking them. And it sounds hard to believe, but you just keep looking at the members' charts. You'll see exactly what I'm talking about. It goes on all the time. Okay, so what was this one? New Zealand US dollar. I thought I had maybe covered that already, perhaps not. And have a look at this nice, lovely TO3 buy signal. That was created, the setup bar was Wednesday, April 26th. Look at the close of that bar that's got the signal marker on it. The close of that is 61.17. Where's our red line? 61.17. Where's our black line? 61.17. Zero variance on two different methods of creating Daniel code targets. That's what sets up the trade, and off it goes. And since then, I'm not going to bore you by telling you that Thursday closed almost right on its red line number. Friday, the high 61.87 at the red line at 61.88. Little reversal bar did nothing. We've seen, haven't we, on Tuesday that this market hit the high at 62.18 against its red line of 62.17, then pull back and close at 62.08 against the red line 62.05. I know we've been through this already. The market is saying to you, I know these numbers and I'm tracking them. And knowledge of these Daniel code numbers is imperative. If you'd like to learn how to do all this stuff, folks, you should take a trading tutorial. I've got some spots available up until the 19th of May. So if you're ready to start your Daniel code tutorial before the 19th, let me know, and I can offer you any reasonable deferred terms that you require. So pitch me what you think you can manage and what you'd like to, when you'd like to start. And if you're in a position to start your tutorial before the 19th, I have some slots available, 2 exactly, and I'll be happy to extend you such terms, reasonable terms, as you might need to make it all easy for you. If you want to do that, get your email to jneedham@thedanielcode.com, jneedham@thedanielcode.com, and get it sent now because I can only take the first 2 people who apply. Okay, crude oil. We're moving now to futures. I want to show you exactly the same thing about this market. In fact, not only this market, every market. This is the June contract of oil, and we had a success sell signal from the little inside bar there, and we got the big push down bar. And the low of that big first push down was 71.42 against the blue line 71.27. Not really target recognition. Not it is because it's such a big range there, but for me, not target recognition. Look what happens the next bar down, which was a Wednesday. The low of that bar is 67.95. The blue line is 67.88. 7 ticks variance. That's all. Nothing. It's not even width of a piece of hair. The market is saying, I know these numbers and I'm tracking them. Now, look what happened today. We had the signals you had from Thursday for action on Friday was a TO3 and the blue line buy signal. The blue line signals are the strongest signals that Daniel code creates. Now, this trade wasn't elected, but faced with the fact you had a market pretty extended, it's diving down, and you've got a blue line buy signal, and we know what happens at black lines. These black lines are absolutely famous, and I know that because maybe 3 months after I first released the Daniel Code website, Akshay, who's an Indian trader, very, very good, works for one of the big banks over there, he called me to say, he was using a Bloomberg data. I've just had Bloomberg in here, and they've created some absolutely new number, and it's, multiply this Fibonacci ratio by that Fibonacci ratio, deduct your mother's age, and you'll finish up with 89, the famous Danielcode black line. And it's famous because it's different. All these Danielcode numbers work as support and resistance, but what with the black line, it's the strongest support and resistance. It's the last level of support or resistance for any swing. But it works also on the close. That a close, the other side of a Danielcode black line, raises the probabilities to about 90% that swing is going to be taken out. And that doesn't look like a huge deal on most daily charts. But we used this when gold was making its high, and we did it at one of these webinars. And those of you who were paying attention to gold, and I know my friend in Reading was, I said if you get a daily close above that daily black line, it means the swing is going to be taken out. And that was a big trade. That was about a $24,000 trade for one contract. Very nice. But look at this. You get your TO3 and your blue line buy because of the target recognition on Wednesday, where the low is 67.95 against the blue line at 67.88. Look what happens with the next bar. It's roaring down. This is a high momentum move. It's been a high momentum move for the last 2 days. It hits that black line, the second one of them, and stops as if it was shot. And that black line you can see was at 63.62. What's the low of this great big momentum that gives you a key reversal bar? 63.64. Okay, do you see that? That's what happens. What happens as we go through here. This is the members chart for crude oil, last updated on Wednesday. You can see the black lines there, 65.82, which it ignored, and then the dominant 63.62. Today's low, 63.64, 2 ticks variance. Markets are saying to you, I know these numbers and I'm tracking them. Pretty sensational when you look at the volatility in the last 3 bars. I mean, they're huge bars. And for most trading systems, when you get big volatility, it just wipes out the support and resistance, because that sort of support and resistance that everyone else uses is not real. It's old highs and old lows, and it's 50-day moving averages, 100-day moving averages. They're interesting, but they're just approximates. The Danielcode numbers are created by the market for the market, and that's why they're so incredibly accurate. 3 huge days down, massive volatility. Where was the turning point? That low, 63.64, against the black line of 63.62, which has been on your members chart for days and days and days. Okay, and here's exactly what happened. There's your key reversal bar reversing at 63.62. So I touched on this. If you're in a really high volatility move and you have reason to think it might reverse, as in it's got a Danielcode signal on it, particularly a blue line signal, and it's got that serious support at a black line, it's sensible sometimes to put on a trailing stop, protect your profits. Once you know how to trade, you'll know how to get back into markets automatically. So you'll stop worrying about being stopped out. I never worry about being stopped out because I know how to get into the markets the next day. And I'll teach you that at a tutorial. Here we are. Yeah, Partho's telling me that amazingly precise. Market spent less than 1 minute there. Yeah, it stops them like they shot, isn't it? Really is. Okay, let's move on. This is the Russell. Russell had a fluffy sort of a night, didn't it? It had a fluffy day the day before as well. It's interesting what's happening with these equity markets, that there's no commitment to the downside. Every time they get a move to the downside, it's muted, it's supported. And this move is exactly the same. And those of you who are not reading Frank de Beer's fourth seal commentary on the S&P, you should be, because what he thinks the market's doing will knock your socks off. And he might be right. But boy, this has been fighting tooth and nail to hold this market up. And that's been the story all the way down since last year's high. The moves down have never been dramatic, have never been vicious and savage, and this technical bear market has been running long enough. It should have generated some scaring power by now, and it hasn't. I'm fascinated with it, and of course we're on the right side of equities almost all the time, I will say. This is soybeans. I wanted to show you some of these softs and grains as well. These commodity markets have much bigger runs than equities. Now, I know everyone's focused on the S&P and gold. Those are the markets, both of them, that have the most commentary on them, so they have the most cross currents in them. And if you put on a simple swing line, they just zig, 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 and a few zags as well. Commodities, when they start to move, they seem to have much more staying power. You can get these big moves with just a 1-bar stop pretty well. And we've seen some massive ones over the years, haven't we? Natural gas, beans has been a sensation at time. Wheat has just been a constant good market. And this is sugar. We had a big run up in sugar, some part of $3,000, 1-bar counter trend. Then it hit itself into a couple of outside bars that weren't so nice, but it's that big initial run. Look at it, straight up $3,000, just sitting there waiting for you to say thank you. Very good trading market, sugar. Had a margin of $500 when we started covering it, and it's now at about $1,500. It's still a very good market, and a not unreasonable level of margin. Sometimes, in my view, they get silly. I know they follow a formula, but it gets silly at times. Leave it at that. So this is a US T-bonds, which was had a it's in a fight. The US Fed wants to see it going down, because that means interest rates are going up. The commercial players want it going up, so interest rates relatively are down, and that's a fight that's been going on, as you can see, for quite a long time. I think the Fed is probably not so concerned about it all. It had a 25 basis point increase in the official interest rates today. Look what this market did today. It had here it is, Wednesday. Let me see. Wednesday, did we have? I don't think we had we don't think we had T-bond signal. We had a funny day there that cooled my interest in it. But you can see where it did manage to put in its high today. Outside bar. Where was the high? 133 correct 0. What's the black line at there, folks? 133 correct 0. Pretty amazing stuff. So it's happening in all markets all of the time. This is wheat, the same thing. It can get some decent big runs on it. And generally speaking, I think commodities are the most underrated asset in the market. I do urge you to have a look at them all. The ones we cover in particular, you tend to get more of the big runs in commodities. Well, it just doesn't seem to be any such thing as a big run in equities anymore, does it? It's been chopping up, chopping down. If it gets 3 days, it's done very well. These are the markets that will give you the bigger runs, and a few of those certainly tops up your equity curve in a dramatic way. This is coffee. I love trading coffee. It's an absolutely fantastic market, and you can see why. The run up, 9,900 just off a 1 bar stop. What about now? Well, the correction's looking a bit grubby, isn't it? You get a 1 bar down, then a buy that fails, 1 bar down, then another buy that fails, 2 or 3 bars down, and then a counter trend and back in the direction of the trend. That happens. That's absolutely normal for markets. It's not going to trend like a whizzer for you both sides, both ways, all at once. But this is one of those markets that gives you those extraordinarily high earns, which just put the top on your equity account. Okay, so that's about us for the time being, folks. Remember, the business of trading futures and Forex is not to be right. The business of trading is making money. Now, that might sound like a silly statement, but I promise you it's true. We trade to make money. That's what we do, and we measure our performance by how much money we make. If you haven't already, please avail yourself of a free trial. Go to the website www.thedanielcode.com to start your free trial. Just hit the register button. If you previously had a free trial, the computer will remember you and it will say, no more. Just contact Terry at support@thedanielcode.com and he will assist you with that. This is finally our disclaimer, which I ask you to read, and I ask you to take it seriously. If you don't know how to trade, it's incredibly easy to lose all of your money very quickly. In the same way, once you do know how to trade, you can make a big lot of money awfully easily. So don't risk real money until you are confident that you know how to trade. If you would like to learn how to trade, I will be happy to teach you and teach you properly. Just go to the Danielcode website. You'll see a link there for Danielcode tutorials. Everything I do here, I teach you the tutorials. So I guess that's about it for the time being, folks. Thank you for being with me. I hope that you enjoyed today, and I hope you can think a bit about spreading out your trading. Now, of course, you can't use a futures account to trade Forex or vice versa, so it's a bit of a hassle opening another account to trade Forex, but I do it, a lot of other people do it. It really is worthwhile. It's a wonderful trading opportunity, and we're likely to see a bit of volatility in the US dollar with the debt ceiling crisis coming up between Republicans and Democrats, and that will make gold fly, and Robert liked that very much. And as well as that, we've got Akshay's joined us, Anthony D's joined us, Collins with us. Greg arrived here. He's the two Gregs at one time. Greg from Colorado, now in Texas, and of course Greg Palladini, who's been so kind to share his thoughts on Danielcode tutorials with you under the forum tab at the website. Okay, so that's it, folks. Do take the disclaimer seriously. This is not a game to go punting money at unless you know what you're doing. Once you know what you're doing, you're on a path to wealth, happiness, and joy. And that's it for today. I'll look forward to talking to you at our next tutorial, webinar, I should say, which will be in 2 weeks' time. Bye-bye for now. Enjoy your weekend.